Hi everyone, and welcome to the second episode of the VC Corner. Those of you joining us for the first time, my name is Ori and I'm your host. The VC Corner is mainly aimed at really demystifying the world of high-risk investments in startups, scale-ups, and alike. Today I have the pleasure of being joined by Jens. Jens sits on the board of Coparion. Jens, if you'd like to introduce yourself to our viewers, that'd be great.
Yeah, sure. Thanks for the invite, almost, and it's great to have picked the one day in summer in London. It's great. Thanks for having me. Yeah, as you said, I joined as the chairman at Coparion last year after I departed from my journey at KPMG for more than 2 decades. And at KPMG, I did run globally everything around our M&A network, so everything we bought and sold ourselves, not our M&A advisory in the field. And all of our innovation network and our research and development and all of our alliances. And I was for a decade the global lead partner for our 360 Microsoft business at KPMG. So everything we did with them as a client and in the market. Originally, I started as the term didn't exist that time. I started as a startup founder in 1993 in Germany. And that was on the edge of, the older ones might still remember that, when it was not quite decided whether it was OS2 or Windows. Mac OS didn't exist by that time.
So we're going back.
We made the bet on Windows, which was great, and then built one of the first collaboration systems for auditors and tax officers.
Okay.
And IPO'd that. One thing with the IPO worked quite well, another one didn't work that well. That went bankrupt, but I think that's part of the game as well. It's a good learning curve.
Of course.
And the other part, then we joined KPMG, and together with my wife, I founded the company, and we still work together. And after that many years in a large firm with over 200,000 people on a global level, I said, okay, I want to have, before I end my career, something else. And so joined Coparion. Very, very happy to chair their board. Very well-known VC investor, backed by the German government, by the KfW Bank, and very successful on the road with a focus on high tech. And chairing the board of a couple of other tech firms in Germany, and working with a couple of firms in Silicon Valley. And we spent about half the time in Berlin, half in Palo Alto.
It's very interesting. So, yeah, in terms of yourself, what kind of led you on this journey? Like, what kind of got you to found your first startup? Like, what motivated you to kind of take that first step and really, I guess, pave the path forward into, stepping into KPMG, then obviously now Coparion. How does that kind of look for you?
I think if you relate back is what is the secret to be successful? I think, and that was the same for us, it's a lot of luck. It's a lot of luck and good coincidence. Obviously, yes, hard work helps. But
I've heard that a lot, actually.
I have seen so many people who were 100 times smarter than me have been less successful, to be very honest. So it's sometimes being at the right time, at the right place, and that is how it all started. So I basically worked with a friend in a shop which sold hardware computers, and we had a client of us, complaining about the German systems, how the tax officers, the tax consultant work, and that it all sucks, and that they don't even have a good address book. And so we basically started programming in Access address books for tax consultants. And a couple of years later, it was 100 people. It was its own software stack. Wow. And then the new market started in Germany, which was kind of the first wave of the new economy stock exchange market. And we were lucky there to get in. We were lucky to get out early enough, because that was the 2000 bubble. Right. And then KPMG was one of our clients. And then we had always a good relation. We were one of the very early Microsoft partners in Germany, had a good relationship to their engineering. Got over from there. And I think the way it works and why it works is get arrogant, and just get your network facilitated. And I had people who worked as translating Microsoft Office as a junior manager in Microsoft, who are now senior VPs in Microsoft, and or who work at VCs or have their own VC even.
Nice.
So I would say maintain your network. Don't always just do things where you say, oh, is there immediately something in for me? Sometimes if you do somebody a favor, it pays back 20 years later.
100%.
And so yeah, we then went to the US, did a lot of work with Microsoft, helped them with some core engineering things for projects which later became SharePoint, and then alongside the West Coast, worked a lot with HP, worked with Cisco in the past as a consultant. And then KPMG was always like the constant angle, and then we went through the second big hope in that industry was the Enron event, when all the auditors were forced to sell their consultants. So that's then how Accenture came together and how Bearing Point came together, and we made that trip. And then in 2013, I got back into KPMG to basically stand up a true alliance and a true relationship network with tech players, which is probably now a vital anchor of that firm.
That's very interesting.
And I always said with 50, I want to be out there and do something else again.
No, that's very interesting. So everything began from like mentioning like a hardware store where you saw essentially something that you could really build off of. And obviously here we are today. So I think there's obviously quite a lot to unpack in that kind of element. So in terms of yourself, the first kind of element that I guess I really want to find out about is really the dynamics that you've seen between obviously, the German market and obviously Silicon Valley, because, Silicon Valley is notorious for startups and investments and everything alike. And the German market, there's also quite a lot of startups sprouting. So what is the main differences in that dynamic that you have seen personally?
So I'm a huge fan of the European idea, and given we cross both places over 20 years now, it says something. We never migrated over to the US entirely, and then there's a reason for it.
Okay.
So I think there is definitely some core values, some core assets we have here in Europe, and I would include the UK in that, where there is different ways of how founders work. There is definitely there's three big downsides, and then unfortunately the third one just appears, where politically the European Union and the German government, probably more than the UK government, missed the train quite a bit. Okay. So it was definitely a major failure that on a European basis we never invested into a serious cloud infrastructure. There are some areas, there are some pockets, and there are some good local events and then local clouds from telco providers, from there's a big retail provider in Germany who now builds their own cloud, which has its right to exist in its niche. But the problem we have is if you want to do something at scale, you can use AWS, you can use Microsoft, you can use GCP with Google, or you can go to the Chinese players. And I founded one that was the first global alliance which Alibaba ever did, was with KPMG, and that was in the time 5 years back when there was quite an opening from the Chinese market, that they said, okay, we want to go into the European market. Ali stood up a huge office in Paris with a couple of hundred people, and when you went in the San Francisco airport, you thought Alibaba was buying the airport. So they got really aggressive in going into the European and US angle, as was Tencent. That's all shut down by now. So we see very, very little activity in the corporate European landscape from the Chinese players. We see a lot though where they just follow their investment routes, very clever in Africa, where they are a dominant player. But the problem is, if you are a Belgium or a German or whatever firm or a UK firm, you have the choice between a US firm or a Chinese firm. The Chinese firm is not really a choice at the moment, because there is a huge data privacy issue if you run on their clouds.
Of course.
But given that you are basically stuck with the US, with the three dominant players, okay, there's a little bit of Oracle, there's a little bit of IBM in some areas, but at scale, it's the three. And so I think this is a major infrastructural issue which we missed in Europe to put something against it. The second is definitely that the idea, and the European Union is doing a lot on the funding side. They try to get stimulus funding into the countries. There's a lot of what we do, what KfW is doing in Germany, KfW Bank, what the German Ministry of Finance is doing. There's just another debate now, just from last week, on how to get more stimulus into startup funding. And then when you look where Berlin was 10 years ago or 15 years ago, it was nothing. And then today it's like one of the startup capitals. So that is good. But when you look on the access to money, I think it is okay on the early stage, on the angel stage. It's good on the seed and on the Series A stage. When it goes beyond Series B, when it goes really at scale, and especially when it goes into internationalization, then a lot of the startups in Europe look for US investors because it's the single largest market. And they say, if you want to go there, we might want to take a US VC. And just the sheer number of available money is just way bigger than what we have here. Plus, there is a different appetite to take risk in investments than there is with the smaller or with the typical European VCs. We have some good ones. We have some really good success stories when you see what a Salonis has done, or Signavio now with SAP. So there is great cases. There's great cases here in the UK, but I think we could do so much more. And I think we could do a little bit more progressive, not from a VC scene. There is a lot of progressive VCs and really good VCs who get their act together in a specialized niche. But in general, from political environment, we could do definitely more, especially from the European side. The positive side, though, I think, is that you see, given money is a little tighter, given it's not about scale for scale. It was always in the past more about profitability. So when you looked at the business plans here, people were more, okay, what is it really? What's the outcome? And it's not like we make money in 10 years. It is tougher. For example, I'm just looking at one company, which is in the B2C area, where you just have to build an enormous footprint first, and then really have your community together, and have it takes time until things materialize, which is easier in the B2B thing. If you have like 100 good clients in B2B, you make money if you do it right, and that's I think those cases are easier to be financed in the US, but it's getting better and better. I would say the quality here is as good as in the US. There is when you look at London, Paris, Berlin, Copenhagen, Warsaw, which is a super interesting spot at the moment. There's a lot of cool stuff coming out of Poland, Lisbon, and in Portugal. There is great companies. There's super intelligent ideas. There's good ideas, good people. The thing is, it is less. And that's the third part where we probably have the third big issue on an economic thing is as we have missed out on cloud as Europeans, I think as much we missed out on AI. Yes, we have Aleph Alpha in Germany. You have DeepMind here in the UK, which is Google now, so that's already gone.
And bigger, yeah.
But there is great AI cases, and I think really, really, really good and then useful ones using AI in a consumer or business environment. And I think we have good startups coming there, great cases which are going deep into an industry, insurance, banking, manufacturing, or which are really going deep into a vertical in a company like finance or HR or something like that. That's good, but again, we missed it on the core of AI. So when you look OpenAI, it is almost it's interesting what AWS is going to do. We will see that, but at the moment it's Google and Microsoft, or Google and OpenAI. I think there is, or to be fair, I would say it's going to be three. It's Google AI, it's Google, OpenAI, and open source, and there is going to be a huge open source play in there, but there is not the core open AI style European AI core AI company. We just don't have that. And that was probably, again, back 4, 5, 10 years ago. If you would have told, we need to invest 500 million into an AI case, that wouldn't have happened. So I think it is now good that with this huge buzz on ChatGPT, it woke up everybody. But I feel we are a little bit behind there. There is areas, Germany, for example, there is great cases when you talk about automation in factories, automation in manufacturing, which is like the core asset of Germany, automotive and manufacturing industry. And there is really, really cool places, cool companies coming up. And I think these are the ones who will be successful because it's merging like the core DNA of what Germany is really capable of and the technology. But when you look under the hood, they use OpenAI, they use Google, they use an OpenAI stack, and then there's a lot of US things then coming back in. And on the core, we probably missed that a bit.
So do you think, obviously you mentioned, Europe kind of missed the train. Do you think there's a route that Europe can really kind of catch up to the US? Or do you think this is a much, much kind of further down the road element for us to explore?
I had a very high up executive from one of the big ones who said AI is not a battle of the most intelligent engineers. It's not a battle of the best technology. It's a battle of money. It's just who can
fund the most,
the longest time enough money against the problem. And of course you need super smart people, but I think they exist everywhere in the world. But it is just extremely cost intense just to create those models, run those things. So I don't think, and then maybe I'm wrong, and maybe I do wrong to people like Aleph Alpha, but I don't think we're going to see another hyperscale AI if that exists. So like another OpenAI or GCP coming up. I think we're going to see a lot of smaller models coming up. And then many of them just rely on open source, which is good.
Building on the back of
that works, and then build something on top of it. So we're looking at a couple of things, language models for an industry like legal, for example, highly interesting. People who are gonna rely on something like, okay, how can we build a model around an industry like insurance or banking? Highly interesting. I think in that area we're gonna see dozens coming up, and it will not always be based on the large AI stacks. It might be then smaller players, but it will be more like 10 niche market players or market leaders rather than one big one.
They're going to dominate essentially the market. Okay, so kind of looking at these essentially like smaller startups that are going to build off the back of these big players. When you look at a startup, yourself or with your colleagues as well, what really defines a quote unquote an investable startup for you? What are the key factors that you want to see in a startup that make you comfortable investing in it or backing the startup?
I think, and then everybody talks, people are important, blah blah blah, but more than ever, it is important that it is the right team. You can fix a product, you can fix a location, you can pivot a go-to-market, but it's hard to fix the team. And if you have a founder team which is really determined to build something, I think that is at the moment the biggest thing, because it's getting and that will stay. It's so hard to attract the right talent. It's so hard to get the right people, and there is, and I'm really thankful of that. I don't even want to call it crisis, but this little bit back to normal we had last year on
Yeah.
valuations, on accessibility of funds. But it kind of really, in German we say to split the Spreu from the Weizen, so to depart the good from the bad. There was a lot of bullshit funded, to be very honest, and
Yeah.
there were a lot of teams. I think you might have a good idea in general, but you're just not capable of building and scaling a business. And if you have the right mixture, and that is definitely intact, you need the right engineering culture, you need the right people, you need the people with the right ideas and the right vision. But on the other hand, we see a lot of startups just suffering on the sales side. If you're good in technology, that doesn't mean you're capable to sell a product.
Yeah.
So,
Definitely true.
and if you have this right mix of 2 or 3 people who are good on the engineering side, who are able to build a solid product out of it, who know their market if they are in an industry or if they are in an industry niche, who know what they're doing, who bring the right experiences, and then the people who can take it to the market, who can sell it, and who can execute on it. And at the end of the day, yes, selling today is different than selling 20 years ago. And you can do a lot of use intelligent gizmos. The systems gets better.
Yeah.
And if you could see what you can do with a modern CRM infrastructure, what those tools can do to you, and then what it was 10, 15 years ago, that's a world. But at the end of the day, if you are not capable to tell your story to a client or to an investor, that's hard to fix after the fact. And the second one is, I think there is, and that's probably the cleanup we see at the moment, where I'm really happy about, is everything got funded. And there are ideas in where I said, how on earth can you throw money behind that?
Yeah.
And if the product or the solution or the offering you create is not having a market need or doesn't solve a problem, what right has it to exist? Or you are so great that you say, okay, we have, it's the opposite side would be that Job said, if I would have asked the people what they want, we wouldn't have an iPhone today. There was no demand for a new phone at all. But I think this is one of 10,000. And if people have that vision, yes. But there were just a lot of very mediocre business cases where I said, okay, it's great, but it's just not worth to build a company around.
100%. I mean, we've seen quite a lot of companies, getting ridiculous amount of fundings, or even small fundings for ideas that really didn't, obviously, like you mentioned, didn't bring the market value. So in your eyes, how do you think, obviously, we kind of flipped the situation on its head, in today's times, it's much harder to secure, initial funding, let alone follow-up rounds. How do you think, from an investment point of view, the current economic situation has kind of shifted in your eyes?
So I think, and that is probably the same in the US as well. It got tougher, period. So doing good rounds, securing funding for startups got tougher. Money is not spent that easily anymore. Investors, private investors, have other alternatives. It was different 3 years ago, when there was basically no option to get any money in the bank. And then now, if you are able to, with relatively low risk, secure 5, 6, 7 points on interest, people think twice. But I would say, for good cases, for good companies, there is funding.
Okay.
And the valuation in total, I think, normalized a bit. But if you have a real good case, you still see revenue multiples which are sometimes even over than what we had 18 months ago. So it's not like everything is down the drain, and we're just working with one firm where investors are really starting to queue and say, hey, we want to get in there because it's the right market, it's the right product, it's the right team.
That's true, yeah.
And then you get funding, and rightly so. But if you have a guy who's himself not really sure about his own vision, not going well in sales, and then treats and sees an investor more or less like an ATM machine, those are the ones which don't work anymore.
No, of course. You get the investor got, I guess, get behind the vision as well of the company,
Yeah.
really kind of influence as well. And I'm guessing the founder will also lean on the investor sometimes as well to get their kind of point of view and their mentorship in this kind of areas. So I guess a question kind of to you, when you first kind of began your journey as an entrepreneur, how did you go about, potentially securing your funding? How did you approach this kind of element? Obviously, times change.
Yeah.
Quite drastically, but
this is like history lesson. So I don't even know if it's worth to recap that, but that concept just didn't exist.
Right.
So when we started, that was pre-IPO of Apple. It was the idea of venture. Obviously, in Germany didn't exist. It existed in the US, but there was no idea, and then the way it was way less globalized as well. So there wasn't any idea of, okay, how can you get a funding? We had private investors, but most of it was just taking on debt from the local saving bank,
Okay.
and then throw in your own money you have, and then grow as you go in and do as much as you can. Which, and again, that by that time in the mid 90s, you had substantial funds in the US already. So, and it just came up here. I think with the new market, even a lot of these things went up in smoke. It got better, and then you had the banks investing in there, and there were structures raising up, but it doesn't have that established culture. I think what lately happens is, and probably around the last 10 years, and then Berlin is definitely a good spot, or London for sure. Anyway, you're closer to the US, that you have a real one globalized market. So you have local investors bidding on out of country pockets. So it's not like if you are a small VC or even family office in the UK, that doesn't mean they invest in the UK. You have all the big VCs, Bain Capital, Sequoia, Battery, you name a big one. They're all in Berlin. They all have their subsidiaries there. They all have their people there.
Yeah.
And I think they increasingly see it as an interesting alternative because the valuations are still way better than in the US.
Okay.
You have markets which have a tendency to invest very local, like when you look at Israeli VCs, they have a tendency to go Israel local and then to go directly to the US as a scaling market.
Yeah.
But in total, we have French VCs being super active in Germany, and the other way around. So we know a lot of German investors who really go deep here on UK on UK companies. So I think that in the pandemic, it was probably a little bit of a go local moment for a while because people didn't know, okay, how does it work? What is going to come? But I think as of now, there is definitely an update on that people behave. So, okay, let's go for the best investments, regardless where the company sits.
Okay. So essentially, once, so I guess in your opinion, once the startup kind of went through all the hurdles that we just mentioned, and let's say you got a solid team, you got the VC backing them, what do you think is the biggest challenge they will face when it comes to scaling that company up now? So you have everybody in play, everybody knows what they're doing, but obviously there's different hurdles for them to overcome now as they try to grow and as they try to go for further rounds.
So first of all, I think you need to have the right VC, and then there's money, and then there's intelligent money. So if you have a VC who just drops money at you, that's fine. But a good VC can be a partner who can do so much more on the networking side.
Yeah.
Who can help you with future rounds. And if you've raised your Series A, you need to think about your Series B. And the Series B investors have a very, very close look on who invested in Series A. And is this a one-time thing, or do they stay in? Do they top up their investment? So we really try at Coparian, we really try, not just to be the investor, but be the prime partner, and coach them and help them and be active. active in the board, not in a control role, but really in a supporting role. And if you pick the right ones, and again, there's money and there's money, who can build you access to your network. I think what then operational the most companies underestimate the ones who don't work perfectly well, which there are a couple of good examples who really do a fine job. The one is that if you have a technology, you need to make sure that you build an ecosystem of partners who can basically supply people and services around your product. And we have seen a lot of companies who in general have great products, but there's nobody to implement. And you can do professional services. You need to do it, but you only want to do it to a degree, because at the end of the day, it's one-time revenue. It's not ARR. It's multiple. If you build the company value, if you build a consulting company, you don't build too much of a multiplier. But I think there is people who underestimate how long it takes and how much effort you have to put into building a good partner ecosystem. And I don't mean reselling partners. It's not about partners who have to, and it's great if you get that done, if you get a channel built to resell your product, that's great. And that is definitely worth a lot. But on the other side, build a partner ecosystem that there are services available around your product. And you see very big companies who suffer with that. When you see Workday in the US, super successful, successfully in the UK. When you see them and they have great products, but when you see them in Europe, the big limiter for them is the accessibility of trained people. And that is something then where they do the right thing, and then they have a wonderful partner network and they invest into that. But even those big companies have a challenge to keep up that ecosystem, that services are available. And if you are the high-end AI company in manufacturing automation, but nobody's able to implement your product, that's
then
tough.
You're not going to be successful,
and the other thing is, then if you keep that example, you need to play with the ecosystem if it's established. So if you go into a German finance department, if that is your core buy center, you want to have an idea how you play with SAP. In the US, you might want to have an idea how you want to play with Oracle or others. So, or if you're on the manufacturing floor, you want to have an idea how your product plays with Siemens or with Honeywell or others. And I think also you should have an idea of having a really strategic approach. Is what is the right hyperscaler for you to work with? So are you a Google shop? Are you a Microsoft shop? Are you an AWS shop? And I think many of the startups, they go either where they got their first credits and get into a startup program and they get some cloud credits and then just ended up on GCP or Azure or whatever, or AWS, or they make the infrastructure decision just a pure technical decision and say, oh, this is a great cloud to work with, and then my system engineer or my cloud operator did AWS before, Azure before, or whatever before, and then he's going to do that again. But it might not be the right partner for your market. And if you have a product which entirely focuses on the retail market, for example, you might want to think twice whether AWS is your right partner or not. So thinking a little bit, because these hyperscalers are getting more and more into the clients as well, and they establish a really, really political influential base at their clients, and they are more than just providing you cloud services. And I think that is underestimated. And once you have made that decision, it's tough to switch afterwards.
Yeah, of course. And I'm guessing that's where you mentioned like the VC would come in terms of their mentorship and that kind of element, help influence the decisions the founders make. Because
open doors with those hyperscalers so that you don't have to knock in the country sometimes. That is definitely things where we from the co-parent side put a lot of effort into.
No, I think that's great. So once these elements are established, and you have kind of a game plan, if you will, kind of going forward, what are the key triggers that you look for, particularly to really start, scaling that startup? What elements do you want to see from the startup, or what kind of results do you want to see to be like, okay, we're good to really push forward for the next round, or we're good to scale up the teams or work along that kind of front?
So the one thing is again back to solve the right problem. So is your value proposition in the market the right one? And is your value proposition in the market the right one long term? So when you look, if we invest on a Series A, there's going to be a Series B, and then there's going to be sometime whenever an IPO or an exit or whatever. So you want to make sure that your value proposition or the client problem survives for a while. And there is what might be a great idea today. You want to be sure that you just not get substituted by an Office 365 update from Microsoft or by the next Google feature or whatever it is, so that you really solve an issue which is resilient enough to sustain. That's number one. Number two is definitely get your direct, and that includes all the discussion we just had about partners. Get your direct and your channel go to market right. So have the right salespeople in place, and have very often in the startups, and there's nothing against it, the founder is the best salesman.
Okay,
that's fine. That's okay. And he should be the best salesman, and he should stand for his product, and he should be able to explain the product better than anybody else. The problem is it's not scaling. So you can't be everywhere. And latest at the moment, when you talk about internationalization, and then talk about from a German company go to the US, or you can go to the UK or whatever. As a founder, you cannot be everywhere. So get that sales and go to market, including the channel, get that rightly set up, and get that set up that it is scaling and that it sustains. So that we see a lot of startups who have a very, very good technical focus, and who can kind of see sales or we do a little bit of LinkedIn lead generation or whatever, and then we sometimes even people say, oh, we outsource sales and then take an agency doing that or whatever. That's just not working on that. You can do that to get a peak limited or to get some additional scaling, but you have to have a fundamental sales and marketing which really works, and which is set up for scaling. And then I think what is definitely different than 15 months ago is that all investors have a way better and more realistic look on profitability. So is it, and that doesn't mean that the company has to be profitable per se. I think after last year, when everything like end of Q3 last year was really tough for startups. And there were a lot of VCs who got ultra conservative and we only invest into profitable firms. So that's not the point, and that's not right. But you have to show, I think, you definitely have to show a projection on, okay, when is it going to be profitable? What does it take to be profitable? And if I take on external money, if I take on investment, how do I use the money to make it profitable? And if you say, you have a clear plan, a clear plan to be profitable in the mid stage of your Series B, that's fine, but you just have to communicate it the right way. Or what we see a lot is that you have investors who say, oh yeah, we at least want to have a projection that if we really get into another tough economy time, that there is a plan B for the firm to turn it into profitability, or to turn it at least into a black zero, not losing money. That if times get tough, You can say, okay, you can adjust a little bit your investments, you can adjust your growth or whatever. But is there like a way to say, okay, if times get tough, I can flip it into a model which is not burning money. And then we've seen some startups who did some really clever and realistic scenario planning and say, hey, I'm going to be profitable in 3 years. If plan goes according like that, if there is another pandemic hitting or whatever, or the economy breaks down or whatever is there,
option.
This is our realistic plan B we can follow.
Okay.
And that creates a lot of trust.
That's really interesting. I've not actually seen a lot of startups obviously implement. Some implemented that during COVID, and some implemented that during this economic crisis.
And we have one company in the portfolio who they founded a startup in the travel industry in the pandemic. That's
Really?
probably the worst thing which could happen
Okay.
to you. And they did a really, really good job. And the Coparian team worked with them a lot, believed in them, supported them to say, okay, let's go through it. And we know there will be an end of a pandemic, and we all hope probably it came sooner than it came, but they survived, and now we're well on the road. And there's a couple of competitors who haven't survived that in the past. So, and I think that also what defines, if you are a founder, what defines to pick the right VC is it a good VC in the tough time, or is it only a good VC in the good times?
I think it goes back to 2 points you mentioned. It's obviously, I'm guessing this startup has a really good team behind them, a really good founding team. And also, they have a Coparian as a VC to kind of back them up. So they went through kind of troubling times, but because you have those two elements, they came out on top, which is obviously really interesting to see.